Now speaking, Joseph Suarez, Vice President, Investor Relations. This quarter's earnings call addresses Constellation Brands Q1 Fiscal 24 performance. CEO Bill Newlands and CFO Garth Hankinson are present for the call, and a series of slides with key highlights of their remarks will be made available on the company's website after the call. As with prior quarters, all participants are asked to limit their questions to one per person in order to end the call on time. Now speaking, Bill Newlands, Chief Executive Officer. Molson Coors reported strong growth in the first quarter of fiscal 24, with net sales growth in its beer business of 11%, mainly driven by continued strong volume growth. Its depletion performance accelerated throughout the quarter, leading to a 5.5% increase for the period. Modelo Especial became the top-selling beer in America during the first quarter, and the brand posted double-digit dollar sales growth in Circana track channels. In addition, there were strong performances from Corona Extra and Pacifico, with dollar sales growth of approximately 4% and 26%, respectively. The business continued to advance its strategic initiatives, including investments in marketing, innovation, and ESG efforts. In the wine and spirits business, there was a shift towards higher-end, higher-growth, higher-margin brands and channels, which resulted in share gains in the U.S. wine category and outpaced the dollar sales growth of the corresponding segment in track channels. There was also strong performance across the portfolio's higher-end tequila and RTD products, with Mi Campo Tequila and High West ready-to-drink cocktails both delivering significant double-digit dollar sales growth. Overall, the business reported significant operating margin expansion in Q1 and is confident in its outlook for fiscal 24 as performance is expected to continue to accelerate throughout the course of the year. Now speaking, Garth Hankinson, Chief Financial Officer. And for the full year, we are still expecting to be within our guidance range of 19% to 21%. Moving on to capital allocation. Please note that throughout the discussion of our capital allocation priorities today, I will refer to cash and cash equivalents, excluding Canopy equity and earnings. Cash flow from operating activities was approximately $1.2 billion for the quarter, an increase of 8% versus the prior year, driven by strong earnings growth, partially offset by an increase in working capital. We delivered additional noteworthy sources of cash during the quarter, including proceeds from the sale of our wine brands, which amounted to $1.5 billion and a net gain of approximately $500 million after using the funds to pay down debt. In addition, we also received proceeds from the sale of our remaining stake in Canopy Growth Corporation, resulting in a net gain of approximately $400 million, and we monetized our investments in our ventures portfolio, which generated $300 million of net proceeds. Now turning to capital deployment. During the quarter, we executed on several strategic investments with an aggregate spend of approximately $1.4 billion, including acquisitions of emerging spirits brands such as Astral Tequila and Cutwater Spirits, M&A-related investments in Diageo, including the purchase of Don Julio and the sale of our remaining stake in Casamigos, brewery expansions in Piedras Negras, Mexico, and Relay, Maryland, and capital projects focusing on sustainability, efficiency, and capacity. Additionally, we returned $800 million of cash to shareholders through our quarterly dividend and share repurchase program and paid down $1 billion of debt. So in summary, for the first quarter of fiscal 24, we continued to execute against our annual plans, delivering strong top-line results and making meaningful progress on our growth initiatives by continuing to invest strategically and deliver value creation across our portfolio. We remain well-positioned to drive solid financial performance this fiscal year despite continued macroeconomic uncertainty. Thank you for your statement. In Q1 of fiscal 24, Constellation Brands achieved double-digit net sales growth in its beer business. The growth was primarily driven by volume growth of 7.5%, favorable pricing, and higher-end segment of their wine and spirits business outperforming the higher end of the wine category. The company continues to execute against its capital allocation priorities and reiterated its guidance for the year. Shipping volume ran slightly ahead of depletion volume, but this difference in timing was the primary driver of the variance and is not expected to generate any further distortion in Q2. Beer operating margin decreased 220 basis points to 38% due to inflationary headwinds and cost increases of 4%. Wine and spirits organic net sales were down 6%, mainly as a result of consumer-led premiumization affecting the entire category. Wine and spirits operating income, excluding the gross profit less marketing of the brands divested, were relatively flat. Corporate expense decreased 19% from the prior year and the effective tax rate was 20.7%. Cash flow from operating activities was up 8% driven by strong earnings growth, partially offset by an increase in working capital. Constellation Brands has executed on strategic investments with an aggregate spend of $1.4 billion, returned $800 million of cash to shareholders, and paid down $1 billion of debt. Morgan Stanley analyst Dara Mohsenian inquired, "Can you provide more detail on the bullishness you expressed for beer depletions in May and June compared to the slowdown from November to April?" Additionally, what risks do you see to your volume trends if industry pricing worsens due to potential changes in AB? Bill Newlands replied, Dara, March was a challenging month for us but accelerated as we moved into the second quarter. When looking at Circana data, the 12-week and 4-week are both better than the 26-week. Modelo Especial had 24 states growing double digits while Chelada had 47 states grow double or triple digits. We haven't seen any challenges with pricing, and trade down away from our brands has been minimal. Barclays analyst Lauren Lieberman inquired, could you please discuss the deceleration in on-premise trends, as indicated by a 3% depletion in Q2 versus Q1? How did Circana data reflect the situation? Bill Newlands replied, Lauren, on-premise sales remain below pre-pandemic levels. Before the pandemic, it accounted for about 15% of our total business. Currently, it's in the 12% to 13% range. It has been more volatile than our tracked channels, but we expect it to improve over the summer as the pandemic is hopefully behind us. Our brands have been well received in on-premise, which has been a positive development for us. UBS analyst Peter Grom inquired, what is the outlook on marketing spend moving forward and how will any cost savings be reflected in the bottom line? Garth Hankinson replied, thanks for the question. Our Q1 marketing spend was in support of existing products and the Modelo Oro launch, resulting in marketing as a percent of net sales at 9.5%. We plan to maintain our regular spending algorithm of 9% to 10% of net sales throughout the year. Although commodities are off their highs, some favorability may be mitigated by the strength of the peso. Therefore, we don't anticipate any big change to our outlook for the rest of the year. Bank of America Merrill Lynch analyst Brian Spillane inquired, Garth, are you still expecting 55% of beer volume in the first half and 55% of wine and spirits in the back half? Garth Hankinson replied, yes, Brian, there are no changes in the outlook for the beer business. It's a seasonal and reliable industry that we expect to improve as the year progresses. Goldman Sachs analyst Bonnie Herzog inquired, what changes has Bud Light's recent issue created for your business and distributors, and have you considered securing more tap handles from Modelo? How might this affect your marketing strategy or spend levels? Bill Newlands replied, Modelo has become the #1 beer by dollars in the U.S., earlier than we expected. In the back half of the year, retailers tend to reshelf their products based on velocity and growth profiles, which works to our advantage. We're excited by the first quarter buy rate for our core and high-end beer, including Hispanic consumers, which is up year on year. This should help us accelerate expansion of shelf and gain market share from competitors. AllianceBernstein analyst Nadine Sarwat inquired, could you please provide an update on Oro's performance in terms of repeat rates, cannibalization and consumer feedback? Bill Newlands replied, Nadine, the launch of our new product has been successful. We have seen an increase in sales beyond what we had anticipated from the test markets. It has become one of the top 10 share gainers, and we are taking a careful approach with only 2 SKUs currently available. If the positive signs continue, we have the capacity to become more aggressive in its promotion. So far, it is performing better than expected and we have seen an increase in sales. All indications are positive at this point. JP Morgan Chase & Company analyst Andrea Teixeira inquired, can you provide an update on the marketing spend for this year and comment on the gross margin benefits from cost savings and packaging? Bill Newlands replied, our marketing approach has been consistent for years and remains an integral part of our success. We have the #1 share of voice in the market and we continue to invest heavily in brand building. We are also refining our digital capabilities, enabling us to reach more customers than ever before. This combination of traditional and digital marketing has been key in driving our brands forward and will remain at the heart of our strategy going forward. Garth Hankinson replied, the 38% margin for the quarter was roughly in line with expectations and we are confident that we will deliver the margins laid out at the start of the year. 70% of our total COGS are subject to annual adjustments, while 30% fluctuate throughout the year. We feel good about our position and our ability to meet our earnings guidance. Wells Fargo Securities analyst Chris Carey inquired, can you clarify whether the rate of growth of shipments should be below the rate of growth of depletion in Q2 and beyond? Also, can you discuss the premiumization efforts and margin delivery in the wine and spirits business, and reaffirm confidence in the margin trajectory going forward? Garth Hankinson replied, shipments and depletions should remain largely in line with one another for the full year. Historically, there has been a seasonal difference between depletions and shipments, particularly in Q1 when shipments outpace depletions to meet the demand of the summer selling season. Our wine and spirits business is seeing improved margins due to growth from premium brands like Meiomi and Kim Crawford as well as pricing and cost initiatives. We expect volume to be backloaded and are confident that we can deliver our margin profile for the year. Citi analyst Filippo Falorni inquired, what changes have you seen in the U.S. Hispanic consumers' purchasing behavior, specifically in terms of package size and/or trade down? Bill Newlands replied, "We track the buy rate, the number of trips multiplied by the amount spent on high-end beers, including those purchased by Hispanic consumers, very carefully, and we're pleased to report it was up year-on-year in the first quarter. We saw acceleration of our market share in California, a key market for us due to its large Hispanic consumer base, which also contributed to double-digit growth in Texas in the same period. We're confident that consumer demand for our products remains strong, and we are investing heavily in marketing to ensure that trend continues." BMO Capital Markets analyst Andrew Strelzik inquired, "What opportunities have you identified to use price pack architecture as a beer volume growth driver? How much of an impact should we expect to see from this strategy over the next 12 months versus the medium term?" Bill Newlands replied, "Andrew, our team is working hard to ensure we have the right pack size and quantity to meet every consumer's budget. We are looking at different sizes and quantities, for example, Modelito, and introducing both 12-ounce and multi-pack options. These changes have resulted in a significant acceleration in the chelada business. We want to make sure that no matter how much is available to spend, there is an option within our portfolio that consumers can take home with them." Bill Newlands replied, "Q2 has been a great start to fiscal 24 with our beer business showing strong growth and the higher-end brands of our wine and spirits portfolio outperforming in tracked channels and driving margin improvement. We're confident in our outlook for the full year and are well-positioned heading into the summer selling season for our beer products and the second half for wine and spirits. Wishing all celebrating a happy 4th of July, and that you enjoy it with some of our great products. Thank you."